That's the switch that we're seeing occurring here in markets. IWM, Russell 2000, not showing us the super bullish signs. I would have liked IWM to be testing this 175. For anyone that's looking a little bit higher time frame and just says, you know what, this is all dodgy in here, I want to see either a break low, new shorts placed, or I want to see a break high, then I feel confident. You are correct in thinking that. Basically, this level here would be a huge zone for the market to break through, 174. At that point, we're putting in place higher time frame buys, and we're saying, okay, we can move towards gap fills here on the market. That's going to be very important. The DAX as well, if we look at the German market, compared to the US, it looks pretty bad. Why? Because this market doesn't have as much technology in it. So if we think about what really is being picked up at the moment, it's actually technology outperforming some of the other sectors. Energy, financials, metals, no good right now, very bad. They were cool for most of 2022. Now they're being rotated out of. This has become a broad-based sell-off, but because they already sold tech, they're moving into that growth a little bit more than they have been. It's the first time we can say that really through all of this crash that's happened so far. Super interesting how that shift changes right at the moment where everybody's like, I'm done with tech and now I'm going into metals. Coincidence? I think not. The news and media are very good at, of course, convincing us of these concepts. Let's move over to the NASDAQ, and here we have the big breach that would be very important here, 11,750 to 11,800. We'd want to breach through that. NASDAQ has not done it. You can see it made a new high after the tools were mentioned, and then it didn't quite breach anything like here. So it's in a smaller time frame change of trend to the upside. We do not have the more significant time frames actually breaching through and showing us, yes, okay, we're ready to go bullish, and then pullbacks are most likely going to be met by buying demand from the algorithm, etc., as we move to fill the gaps. Speaking of gaps, we still have huge gaps left on the SP500, NASDAQ, Russell, Dow, all of these markets. We do have the little island. So the island is a gap below, structure formation, gap above, bullish buying. And I think if we make a new high here, things are going to look a lot better. I feel like if we make a new high here, the market's going to snap this high, which is the 38.30. And if that occurs, then even though pullbacks may occur afterwards, it's a higher statistical likelihood we go to fill this gap and possibly even the secondary one. Remember, this was a weekend one, so it just like completely didn't have price there. It just fell straight through. So there's some serious action that could be there for the bull side. For bears, well, they're looking at now or never really. They want to short this thing right down. And I don't know if bears can really convincingly say it's going to a new lower point until they get underneath this low. And once that occurs, the most logical conclusion, as we've said many, many times on this channel, is to hunt for the weekly 200. So if we put the 200 here, we'll just change it from a 20 to a 200. And you look where that is, 3,500 previous resistance, obviously a Fibonacci as well of the whole pull. So if you grab the Fibonacci here, we put that on the chart, take that across, there it is, 50%. So 50% and of course 61.8. I saw the comment the other day, someone said, well, Tom, that your bond traders that are calling 3,500 and 3,200 are just using Fibonacci's. It's more than just the Fib actually, that they're using an average median of working out the actual prices of the stocks underneath the S&P 500 and saying, where is the median, where is the average? And this is where they're getting those forward projections coming through. But look, the whole point of markets is to find things that harmonize together. If we go down to here, what happens? 200 previous buy zone for many, many of these big fall offs in markets. If we go to a 61.8 Fib, well, guess what? At that point, we also have a very fair value for a lot of stocks in the markets based on historical metrics. So both of these zones work out for bears, but we haven't quite seen that flow through yet. New low here though, I'd be pretty worried. Small time frames, this is what we're looking. We basically want it to breach this supply over here. That's that 38.30 area. And if that happens, more positivity on this market. Currently, it's still bullish on the 1 hour, 2 hour kind of time frames. We're still theoretically bullish. For small time frame traders, they're going to be bearish due to what happened here at the close, and they're going to be trying to short it through. But the small time frame towards the short, I'm not too sure if I'm interested in that trade just yet. A lot of people are saying this is it, it's going to blow down. you can certainly do it. Just have tight stop losses right now. Make sure you have risk management and structure. I'm looking towards the buy over in this area. We'll find out whether that does end up occurring. And of course, we'll keep watching it. For the expiration, the max pain on the previous session was 375. So if we go back to SPX, you'll notice the close was just above 375. Very sneaky by them to get their max pain through for that options expiration. But the one on Friday at this stage sits at 378. Look, max pain is not to be used by itself. It's only if you can see a bullish trend, possibly you have a resistance that you're already technically using at that max pain. That's where you want to be using it, guys. Remember, it is not the golden goose. It is more of a concept that you can say, okay, if all the options were to expire worthless, where would the street make money? And if the street doesn't have the positions and it's actually more retail traders, this can help you quite a lot. So actually price would be a little bit above where it is currently if it was to expire perfect on the Friday at this stage. Move over to Bitcoin market to finish up the video here. And of course, we'll talk about this. Bitcoin 20,400, right on basically production value cost, which we'll look at in a moment. If anyone's not aware, this is actually the raw cost of production for Bitcoin at this stage. Still not really out of the woods till we get past 23 into the 24,000. At that point, we put in accumulation. And in our experiences here with crypto and with Bitcoin, it can hover around for a while. So I'm not too interested in the speculation here. I'd like to continue to follow it though, and then find if we can get a good zone. Notice the volume on this particular exchange has risen. So in Wyckoff's one of his laws, he talks about the law of effort. And basically this law of effort is, does the volume maintain a really high zone throughout all of this? If there's a lot of transactions going on, that could show us that nasty Wall Street and others are actually purchasing into this market while retail is getting scared. Earnings, obviously we know here that Bitcoin production cost is right around this 20,200. So we're right on that level. It doesn't mean instantaneous buy, but the whole point of this market is that it should be worth its proof of work. So we'll find out whether that ends up holding. If you haven't already, come and follow us on FX Evolution on Twitter. We're getting close to 7,000 followers, so thank you so much. We do post a bunch of things. I'm going to post after this video something. And as I mentioned, we've got some extra news coming out. Thursday, 10 a.m., Fed Chair Powell comes out again to harass us in the market. How many tools will he mention? I don't know, but let's hope it's about 6,000 tools so we can go up. Thanks very much, guys. Subscribe if you enjoy the content. Of course, give us a thumbs up, and we'll see you in the next one. Bye for now.